Good morning, everyone, and welcome to the Pivot Boss pre-market video for Wednesday, May 8th, 2024. I am Frank Ochoa, aka Pivot Boss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. Right now, a little bit of weakness here pre-market over the last several hours, seeing some modest selling pressure here. One of the things we were looking for here heading into the session is for a little bit of a shakeout, a little bit of a down move here that could lead to a buying opportunity and a continuation above as this market continues to work higher toward the FOMC key level here of 52.36 and perhaps even higher into 52.85s up the way. We have a rising 8-period average right here that is coming up to provide support now, especially after the recent squeeze. The previous session with a super narrow range day. Today, also narrow range, but already more range than the previous session. And this could provide a buying opportunity from a failed new low perspective. So pushing below the previous session's low, rejecting, or finding a rejection, and then finding a buying opportunity for a continuation up. Even if this thing was a little bit lower, if this thing got into the 5160s, for example, it still could offer an opportunity for rejection and a turnaround back to new highs. This market right now is seeing quite a bit of a short squeeze right now, and again, any pullback could offer a buying opportunity for another round of strength up ahead, at least in the very near term. If we take a look here at the NQ, similar price action out of the NQ, very narrow range of price action in price range in the previous session. A little bit of a pullback below the previous session's low right now happening, and seeing some weakness here early on in the pre-market trade. Again, not an opportunity to fade it just yet. You want to see a great rejection or some sort of reaction to prices below the previous session's low. You still have an 8-period average that's coming up to provide support above all the 3 slow-moving averages right now. Any pullback into that zone could provide a bullish cushion here that offers an opportunity for bulls to defend and return back toward highs as this thing rotates higher toward the previous close here in that 518 level. So a pullback right now offering an opportunity for a shakeout, perhaps a rejection, and a rally up ahead, or at least some sort of short-term reversal to the upside down the road. If we take a look here at crude oil, crude right now down about 1 1/3% at the moment. We were looking for any failed new high to lead to a drop and a continuation downward toward that 76.25 level. We're not seeing the failed high, instead outright selling pressure. We've seen this kind of downtrending compression here, and 76.25 coming up very soon. We got into 76.89 so far this morning. Still seeing some weakness here, and any pullback could be a selling opportunity in this market as it continues to be a depressed market at this moment. 76.25 is going to be the next key target down below. Could be reached today, could be reached in the days ahead. Any pullback could be seen as a selling opportunity to that target, and then we could be looking at a drop that takes us even lower into the previous lows there. That's going to be the previous lows that come into play right about here. 74.50 will be that level right there. 74.50 going to be a key level there to find up ahead, the L5 cam level there on a monthly basis. So dropping downward as of right now, any pullback could still be seen as a selling opportunity. If we take a look here at gold futures, gold has been stuck within the range for a while now. This is a 6-day narrow range, but you can also back it out to a 12-day as well. From the beginning of the month here, you have these 6 days very compressed, but if you back it up even prior to that for these 6 days, again, it's a 12-day narrow range right here that's developed. It is holding at these highs, holding above the 2280 level, a key level here, but you do have some rounded characteristics here which could suggest a bit of weakness up ahead. But this market's been so strong, especially since early February here, that you would think that a continuation is likely ahead. So 2350 is going to be the key level there that this thing needs to break through. once we do see expansion from this narrow range, it could be 150 plus points of range, which means if we break through 2350 plus 150, we're gunning for 2500 down the road. So maybe it's building energy here for a 2500 move in the next few weeks here. So again, compression right now, stuck in the middle of the range, building energy for a 150 point breakout move down the way. Lastly, taking a look here at the YM. The YM also seeing some modest selling pressure here this morning, not quite as aggressive as the ES and the NQ, but one of the things we looked at for this one before, even, you know, again heading into Monday afternoon, was if we can get a shakeout back down towards, say, 38.6, 38.650, that could provide a buying opportunity for a continuation up to the FOMC key level above of 39.5. And right now, a modest pullback, not much of a shakeout at all, just a very tiny pullback. We got 103 points of range, 25% of ADR. It's very narrow. But if we can get a little bit more weakness here, perhaps a rejection can occur, and that could lead to a swing continuation to the upside. Not sure how much strength we'll see outright today. We could see a little bit of a return back toward the day's highs once this down move is done, but it's been a very low volatility week so far. If you look at these 3 days right here so far this week, it's a complete change from what we'd seen in the previous week and what we had seen in April prior to that. So again, a super low volatility week right now, but any pullback could still be seen as a buying opportunity for a continuation up over the next week of trading. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.